The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we've got game, as they say in the trade. It is rocking and rolling today, and it'll probably continue for some time, folks. This is only the first day down. And, you know, maybe it's the last day down we get. Who knows? But let's take a look at that DAX. As you can see, they're very nice three-drive pattern that formed before the market sold off. But the one that is really interesting, folks, is this next one. This is almost a textbook case of technical analysis. This is a 15-minute chart of the FTSE, the London market. But I would like for you to focus on the three-drive to a top pattern that was made exactly at the top. You'll notice that we had multiple ABCD patterns forming there. And that's pretty much what you'd like to see. And as you can see, the low so far today has been right at a 61% retracement. Whether that holds or not, you know, remains to be seen. But that's what it looks like here from the cheap seats. But keep a quick, close eye on that. We've got a lot of things happening in the world. And as I mentioned before, this is a situation where we're the first day down. If this is a down move, and we're certainly not aware of that as yet, but we talked about it yesterday a little bit. I wanted to bring to your attention the one that I've watched for the overall market, which is the New York Stock Exchange Index. And you can see it made that nice ABCD pattern pretty much spot on, you know, where it should have. And that's what we were watching as it was unfolding, you know, as of yesterday. So that doesn't mean it's not going to turn around and go back and make a new high. It just means that we just made a very important spot. We did the exact same thing, of course, in the Dow Jones E-mini. And of course, we've dropped several hundred points from that level. But as you'll see from this chart on the Dow Jones E-mini, we went up to a perfect ABCD pattern. And then we started to sell off. The last time we had a BC swing on this, we went from 24,900 down to 23,400, 540 points. Whether that'll be the case or not, I don't know. But, you know, neither does anybody else. The only thing I know is yesterday you didn't have to risk very much at those spots. That was the main thing that we were really trying to see what was going on. And if we looked at this, and this was actually when we were on the air yesterday, was this E-mini chart that we were looking at, was right at, you know, a beautiful ABCD pattern. And the most important thing, folks, is we took out the top of May 11th by one point. I mean, hello, operator. I mean, that is not the idea of a breakout. It really isn't. So keep in mind that that's what we're, you know, looking at. See, that's it. You know, if you remember, folks, over the very first thing I focused on Monday was I picked out 15 stocks of the big ones, the big NASDAQ, the big Dow Jones, the ones that you hear about all the time, Google. You know, every single one of them, every single pattern had a topping pattern. I mean, every single one. And that is, you know, that's not unusual. I sent those out to everyone because I think there were maybe 17 of them. But they were all doing exactly the same thing. Caterpillar, IBM, Goldman Sachs, Microsoft, Google, Amazon, Apple, every single one was in a topping pattern. Now, then we had this news came out over the weekend about the trade thing with the China, and the market exploded, opened 200 points higher in the Dow Jones. And as I mentioned on Monday's shows, it was either the greatest selling opportunity of all time, or we're going to the moon. Well, it sold off a little bit. And that's all it means. It just sold off a little bit so far. It doesn't mean anything. The thing is, it's just the first day down. And that's the key that I'm looking at. Because if that's the case, we're going to see more of this to the downside. So we'll see that, what's going on. Okay, let's take a look here. Okay, let's take a look here at some of these other markets that we want to cover here. I want to send this to you because we're at the proverbial moment of truth in one particular market here, folks. I want to show you, this is the weekly chart of the euro. Now, this comes from a very, very experienced trader over across the pond, and this is a long-term weekly chart of the euro versus the U.S. dollar. And you remember, we were looking at the price of 117.40 as being key. We held that for a little while, then we rallied about 130 pips. But here's where we are right now. We're sitting right on that 20-min line, and that's also a 382 retracement, you know, going back to way back when, who knows. But that number was at 117.08, and we're actually at 116.90. So we've actually broke that. But anything a little bit weaker than this means the euro is getting ready to, you know, really head south. So that's the main thing, to see if that is going to be the case. Now, that means that the dollar index is most probably trading above 94 today, which would not necessarily be surprising, but that would be something else that we're looking at. But the one that has, to me, the most amazing pattern of all is this Japanese, excuse me, boy, Larry, this is just a second here. You know, I want to talk about this in a minute. I'll put this up here. This is the Canadian dollar up here at this 129.40 level. But, you know, it's really amazing, folks, as I've gotten older, which you all do, but trading for this many years, I noticed that, and I've always thought this, that you had to have a really strong energy level in order to be a trader. That was, you know, one of the reasons why I never smoked and I never drank. I will have a glass of wine occasionally, and I don't do that in the middle of the week because of the fact that the slightest difference can screw up your brain cells. But you really have to have a lot of energy for preparation in these markets, especially when we're starting to see the volatility that we're starting to see now. That's not an easy thing to do, because you have to prepare yourself both mentally and physically to be a trader. It's just not there sitting there staring at the damn monitor. That's, oh, I said the D word. That is not where the thing is. The thing is where you want to be prepared, you know, for the day and try to, you know, make a dollar. By the way, those of you that have been subscribers to Shane Smolian, you'll notice that he is stopping his newsletter and video service and everything to focus on what he really loves to do, and that is trading. So hopefully we'll have him back on the air soon, but he's making some serious changes so he can focus on trading, and especially with the volatility in these markets. He enjoyed doing the newsletter, but you know, it's just too much, and I can certainly understand that. But anyway, we'll see what it looks like here as we go through. Now, here we have to talk about one that you talk about losing sleep, folks. This is the main thing. I want to walk you through this because we did talk about this yesterday. This is the chart that I posted on Friday looking at the Dow Jones Transportations. And when we get back from the break, we're going to have to go through this again because something interesting happened on the way to the supermarket yesterday, boys and girls. You have to pay attention to this one because it's going to be really interesting to take a look at it when we get back from this coming break. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I posted the chart of the Dow Jones Transportation showing that massive quadruple top at the 0.618 retracement and what the importance of that could possibly be. And that's the one thing that I did want to talk about here this morning. And if I will just be patient with me for just a tiny bit longer, I will try to find the next chart, which is not an easy thing to do. And here it is. Here's as the market was moving yesterday, we talked about this, but I wanted to point out to you that if you look at this, you'll see that we had this beautiful there was actually 4 drives up there at the exact 61% retracement, and then we went above it, and I called it a bear trap, but actually it's a bull trap because it traps the bulls. You'll notice that the little butterfly pattern that was there over the last 7 trading days was the key to that. But once we went back below that 61% retracement, that was the key. That was the same type of thing we were looking at in the Russell 2000 for to get below the 158 level. That's really what we were looking for. See that in the Russell. Let's put that Russell up just to show you what happened. I don't even know because I don't trade the Russell. All I know is that the S&P, the Dow Jones, the NASDAQ all hit their major things. But this is what we were looking at potentially. And would someone please tell me to let me know if the IWM went below 158, because that would have triggered the sell signal. Now, those bear traps and bull traps were things that were covered both by Gartley and then also by one of his friends, Jesse Livermore. They all lived during the same time there in New York. And basically what we're looking at here was the fact that if it gets back below that 158 level, then you're going to be looking at, something to really pay attention to. Now, like I mentioned when I started the show, this is the first day down. This is going to be something going on here. By the way, there's some news out about, IWM has not triggered. Thank you very much, Terry. But the next thing I wanted to chat about here was the fact that I've lost my train of thought. Hold on one second here. I've got the chart up. I want to talk to you about failure patterns, and let's just take a look at one here that we were looking at last night. It was a very, very, very interesting pattern. What is going on here? When I look at these charts, I just can't seem to find the doggone things. I don't understand what's with the program. I don't. Here's the one I want to see. Here's the euro, folks. We saw this euro going on, and you'll notice that we made that 3 drive to a bottom down there at that 117.10. We rallied up to the 38% retracement, and then we came back. And I was looking for support at both the 61 or the 78, and we just shattered that and went below it. And that's the key to doing some of these things, is that these patterns fail a lot. I mean, you know, they're only right about 60% of the time, so you have to be able to focus on what to do during that other percent of the time. That's the main thing. Now, here's one that I sent out that looked absolutely beautiful and started off just gangbusters. This was a 3 drive pattern in the 15-minute chart on the yen, and we had a really nice rally almost to that 109 level. And before Frederick could get his hands out of the cookie jar, this thing just collapsed and went below the bottom of the page. We went below we went to 109 and change, folks. So when it failed with that big wide ranging down, it was just absolutely a cascading market to the downside. And that's the key to remember here, that you don't know what the heck's going to happen next. If you would have bought that and didn't put a stop in and then went to sleep and woke up this morning, you'd be looking at $1,500 as a loss. Is that a way you want to start today? No. So you have to use a stop on these. And the reason is, if you don't, you're telling the market, Mr. Market, I know more than you do. I know where it's going. I can control my risk. And I can tell you, to the person that is listening to this, that it is not the case. It certainly is not the case, because you don't know what's going to happen next. Like Mark Douglas said, the markets can always do something unexpectedly, and they usually do. So pay very, very close attention to that. It's a very important market principle, that we don't know what's going to happen next, and all we can do is focus on what we think we're doing, and that's really that itself can be a dangerous thing. That's absolutely for sure. Now, we've had a little conversation here about the gold this morning, because we had a pretty big run here last night. We got up to the 1298 level. I just want to bring it up here over the past couple of weeks to see where we are. You'll notice here that we had that big ABCD pattern on this 15-minute chart, stopped right at the 1281 level. Today we rallied up to 1298. Boys and girls, if you take 1291 and you add $17 to it, which is the half harmonic number in gold, being $34, half of 34 is 17. The high comes in at, say what, 1298, and we went all the way down to 1288 this morning. We dropped another $11 after hitting that harmonic number up there, which happened to be a little 3 drive along with a 127 pattern, when you're looking at the 15-minute chart. But here again, if you're looking at a 15-minute chart, this doesn't affect your position in gold, because if you bought it, you're going to put your stop at break even and see what's going to happen. Really, that's what you're looking at. There's nothing more that you can do, and that's the key to looking at it. One other question that has come to the attention of the financial folks here, and that is Deutsche Bank. DB. We've been talking about this chart since Hector was a little pup, and they announced another 10,000 people being laid off. And if you take a look at this, you'll be able to see here that we have made new lows again. After we rallied a day or so, we rallied on Monday and Tuesday just a little bit, and now we're breaking down below those lows again. Folks, Deutsche Bank is going to go to the same aisle of the church for Holy Communion as did J.C. Penney's, as did Sears, and many other stocks. So pay close attention if you own that stock, because it's in big, big trouble. No other ifs, ands, or buts about it. There's nothing. Oh, we got a caller in from back east. Victor, are you there?
Yeah, I was just going to ask about Deutsche Bank. I figured they had something planned for over the weekend. It's a 3-day weekend. It's a good time to do it,
It certainly is. Somebody knows something, Victor, because they just keep they're hammering the stock. It's not not news that is not hidden.
Yeah, and I found a fake print on gold. It's going to 1240. It was from 2 weeks ago. But next thing is, where do you think AT&T is going to go? You know, if you raise the interest rate to June 14th, that's like a shot in the arm. Shouldn't the whole market tank because everybody's going to be paying more interest and everything? The government's going to be paying more interest. And then Trump's going to have to come out with quantitative easing.
Well, that's a lot of thinking. I'm just going to do the chart for you because I'll do the chart when we come back from the break, but I'll do the chart. I can't think of all those other things. Yeah, but I will. That's T, right?
Well, you always got to think ahead. The market's always thinking ahead, you know what I mean? And it's the summer. It's a good time to shoot the market down. And Trump, you know, he said this whole market was a bubble. Remember, if you raise interest rates, the whole market's up. But now he owns this market, so he's either going to come out with quantitative easing or the market's going to tank with all those gaps.
All right, well, I'll put the chart up a telephone. We'll talk when we come back. Thanks for calling in, Victor. I appreciate it. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we're going to follow up with what Victor from New Jersey asked us about, and that is the stock of AT&T. As you can see from this daily chart, that it has been a much weaker than market stock, and it certainly doesn't look like it has a lot of upside potential in here. You know, trading at 32, there's a lot of things that if you wanted to buy something, the things that look better. But this is not a bullish stock, folks. But if you really want to see a better picture, all you have to do is to click on the weekly chart, and you're going to be able to see a stock that used to be trading at 60. during the debacle in 2001. We came down to 18. But look what we did in 2016. We rallied right up to the exact 61% retracement there at $45 a share. And look what's happened since that time. This is a very bearish pattern long term, no matter how you look at it. And the stock is certainly fulfilling those obligations as far as bearishness. It just does not look good. You want to buy things that are going up and sell things that are going down, and this thing is not going up. So I would certainly, take a spot to, find something that would make you think that it's going to, at least, if nothing else, have a chance to go up. And I don't think American Telephone has that chance. There's a little book that I really love called Only Yesterday that reviews everything from the 1920s. And of the 30 Dow stocks, 16 of those stocks went bankrupt. There's only one original Dow stock left, and that's General Electric. And I believe American Telephone went bankrupt twice. And this is during the time when we were having electricity, and we were having refrigerators, and we were having telephones. I mean, this is an amazing thing, folks, to see that happen. And yet this is people forget about that. So that's what we're watching this morning. So anyway, just keep in mind as we see this that we're really looking at something that is you have to follow the patterns and really see what's going on. I'm trying to do two things at once here because I'm looking to see what these markets are going to see, what kind of a bounce back rally we're going to get after the debacle last night, but we'll have to wait and see. The Treasury bond market, folks, this in the middle of the night last night, we went up to that 142.12 level. That was the exact 61% retracement of that previous high. We've now backed off about 14 pips from that level, and it looks like that might be the top that came in during this time. So we'll have to, pay attention to see if this is going to mean very much at all. But it's still a little bit early, and we all know that it's much better to be late to the party and have a really good idea of what the trend is going to do, as opposed to try to pick a top or a bottom where it's just going straight up. Trying to buy those bottoms and tops, sell tops, it's better to wait till you have something like you have in the transportation index, where you have a situation that you know exactly where your risk is going to be. When it broke out above that quadruple top, a lot of people bought it, and it looked like they were right for about one day. But the easy trade was wait for it to get back below there again. And the reason for that is now you know what your risk is going to be. Either that, or you just sell it and put a 3% stop on it, and hope for the best. That hope is not a good trading word, but pray for the best. And that's the way I would do it. But no matter what you do on any of these things, make sure you always put a stop in, folks, because if you don't, you're telling Mr. Market that you know more than it does, and Mr. Market does not like to hear those things. So watch it as we go through some of these things, because it's important for stop protection. Someone's asking a question about the silver resurgence. I haven't had a chance to look at it. I've been watching the currencies and the stock indices and the bonds so much, and I really haven't had a chance, to review the silver. Of course, I've been watching gold and everything, and it still looks bullish to me, unless we take out that 1281 level. If we take out 1281, the next stop on gold will go down to about 1265. There's a big number down there, but we'll see what's going. That's correct. It did not take off, and that's not surprising, because it's been leading the market. Then all of a sudden it didn't. So I really don't know. What we could do, Mike, is to actually put up the chart of that silver and gold. Just a second, since we're looking at this. It'll only take a second to do it. I hope it'll only take a second. And then just hit the 60-minute. Bada bing, bada boom. You're right. That's exactly what it did. Boy, you're absolutely correct. Very good. I didn't even see this because first of all, I'm not jet lagged, but boy, I'm tired from all these markets in the middle of the night. My beepers are going off all the time. There you can see silver here. We made a beautiful Gartley up there at 1672. And you'll notice here that that is a very important spot as far as the ABC structure. Now we've come back down again. Wow, we dropped 40 cents in silver. That's quite a bit. You know what? This is why you keep your stop in the gold at 1285, folks. If you bought that gold on the, we sent out the, the reports on all these things. We had every single position that we had going on yesterday, beans, wheat, oil, treasury bonds, the stock market, sugar, every single one was working. And I mentioned, you got to put your stops in on these, because these markets have a tendency, to did that silver chart post, by the way? Yes, it did. Anyway, that's pretty much what you're watching here. So keep in mind that you've got to protect yourself at all times, especially when the market can drop 200 points like we did in the Dops. It went up 200 points, and don't be surprised that it can't go down 200 points. So that's a key thing, to pay attention to when you're looking at some of these things. So watch it. We're having a heck of a nice rally here in the Nasdaq now. We've rallied up. Wow, we're up 37 points. Watch the Nasdaq up here at the 6670, folks. There might be a little bit of. Let's just double check this to be sure. Just double check. Yeah, that's the one. 6680 is the number you want to look at in the Nasdaq. We're at 6668 right now. So watch it at 6680, because that's going to be an interesting one to pay attention to at that point as we move through here. We got gold trading at 1288. It's very important that gold not go below 1285 if you're bullish, folks, because that's going to tell you that something is not right, because it had every opportunity. We hit 1298 and change, and now we're down $10 in a matter of an hour and a half. Hello, that's, there was not a lot of bullish action up there, boys and girls. That's basically what it looks like as we see this. Now, remember we talked a little bit about the crude oil possibly, making a major top, and we did hit that exact number, which was 40. Well, we went a tad above it. We hit 72.91. The number we were looking at was 72.70, and we sold off about a little more than a point down from that, which isn't much, but at least there's a possibility that could possibly be working. So let's keep close attention to that. We'll take a little break here. 877-977-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, I'm back, folks, and I posted the chart of the silver on the hourly chart in relationship to gold, and really not too much has changed here. Silver made a higher high yesterday and then sold off, but you'll see the Gartley pattern that was there, and now we're just in the middle of some more consolidation. That's really what it looks like. The key thing is that figure down there, that 1281 level. Below that sets up 1264 in the gold, but boy, the cycles and everything are set up perfectly. That doesn't mean that it's going to work, but it's certainly set up that way. Now, the pullback today that we've had, we've dropped $11 an ounce, which is normal, and we should hold the 1285 level, but if we don't, that would put a giant question mark on this, and so pay sort of close attention to that. It would be very, very interesting to watch this unfold as it's happening. So that's the key thing, to watch. That's at least that's the way I'm looking at it. But those levels are very, very important. The cycles long term look just about as good as you can see. No, I haven't really looked at cattle. We were looking for cattle to make that double bottom here. Let's just bring this up here to show you, what we're looking for in cattle, and cattle certainly did it. We made that double bottom. We're trading about a little bit better than par, a little bit better than 100. So it's bounced off of that double bottom. But frankly, I don't really see it. There's so much other stuff going on, Pete, that you just can't follow it all. But the key on that cattle chart is look where it had a really good bottom with a Gartley pattern. It rallied really strongly, 3 cents in one day, and what did it do? The next day it gave it all back and collapsed. That's what we saw in the Japanese yen, folks, last night. So remember, it's okay to buy something, and if it starts to work, fine. If it doesn't work, just make sure you use a stop, because if you don't, you're telling the market that you don't really need to use a stop, because this is what we're here for. Now, there's also the possibility. I've always said any market that can give you 200 points can take 200 points away from you, and that's what happened with the Dow Jones. We gapped up 200, went to 360 higher on Monday. Tuesday, we gave it most of it back. Not all of it, but we gave some of it back. So that can happen to any market. That's why you've got to be able to prepare yourself for it. Mr. Z put up a beautiful chart this morning that he showed me, and I hope that he'll bring it to your attention, is the nearest futures contract for cattle on a weekly basis is making an absolutely beautiful pattern as far as a buy. So, Mr. Z, if you get a chance, put that up there if you could. Yes, the sugar is acting really well. That contract is well over $1,200 from where we bought it. And they don't all work, but that was one that did work. And like you say, you got to pick up. The blind hog has to pick up a few acorns every once in a while to feed himself. So let's keep an eye on that as we go through and look at some of these. Regarding the show tomorrow, remember, we're going to have a cameo appearance by the wizard himself, Norman Winsky will be our guest for a little cameo appearance where he's going to be showing us some key times of the day, and then we're going to have him on for his holiday spot, which is also going to be the full moon coming up, and that'll be on Friday. And there's a holiday on Monday, so the markets will be closed for Memorial Day. And I hope everybody has a wonderful Memorial Day, and certainly remember the veterans, because we wouldn't be here if they didn't give the ultimate sacrifice to see where we are. Now, let's take a quick look. We've had a question about the bit. Here's Bitcoin, Market Winsky. You know, that's a good moniker. I think that's what I'll start. No, I better not use any nicknames. They'll get mad at me. That's a good one. Thanks, Terry. Okay, let's take a look here at Bitcoin. We did make the 61% retracement. We did get it down again to that 7,922. Folks, if we get below 7,800 a share, this thing is heading south to 7,000. That's what it looks like, is if it don't hold at 618, it's off to the races down to 78% level. And you have to be careful. You see those forecasts that are down there that are on the bottom side of the page that you can't see? That's $4,000 a share, folks. That's from 20,000 down to 4,000. So they still have the possibility of getting to that level. And even though it could be incredible technology, much like telephones and indoor toilets and electricity and stuff, and automobiles that were happening during the 20s, that doesn't mean it's going to go up. So rely on the charts, because that's the sum total of all the buyers and sellers. If they're buying, prices are going up. And if they're selling, prices are going down. Say no more. End of story. Bada bing, bada boom. We'll see how this works out. Let's take a look here. Well, by golly, boys and girls, we did hit 6880 in the old NASDAQ. And watch that figure really close, because that's a very, very important number in the old NASDAQ arena. And we'll watch that one with very, very close. Now, we're selling off in the bonds. We're down over $500 now in the bonds from that level that we hit at 142.12 was the high. 142.10 was a 61% retracement of the last swing high. So sort of keep an eye on that one. That's one that should be watched, very, very closely. Is the way I would look at it. So that's pretty much what we're watching here this morning. But whether it's going to happen that way or not, I really don't know. But that's what we're looking at as we see some of these things. And as we look at them, we'll notice if that's going to be the case or not. Okay, now another one that looks very interesting here. Oh, dear, I think I made a slight mathematical error on something. Give me a second, folks. I'm trying to do an order as we're doing this at the same time. Oh, dear. Oh, no. Don't tell me this. Don't tell me this. This is not a good thing. Oh, tell me not. Ah, shucks. Blew that one. Oh, son of a gun. Wow, that's a pretty good run here. This is great. Now, this is what we like to see. Terrific. Hold on here 1 second here. And I want to double check prices, because this is, happy hour, amateur hour, and I want to see how much, if we get much above that 68.80 level, that'll be interesting to pay attention. But the NASDAQ has been the leader of the pack, but it also is the one that pushed it straight down. Folks, these notes and bonds, they're just flat out bearish. We had a 2-point rally off the bottom, which is pretty much what we expected. I didn't think we would get much more than that. If you take a look at this, is what we did this for the newsletter, and this is exactly what's happened, is we've had a 2-point rally in these things, but they're not going to go anywhere. This is a very, very bearish chart long term. We've been saying that for a long time. And that was probably a flight to quality on this. That's what it looks like to me. But whether that's going to be the case or not, I'm not even sure. But pay attention to it, because if we rally much above the 143 level in the bonds, then we could get a little bit more of a rally. But that's all it is. This is a very, very negative situation in interest rates, and we are going to be going higher. And the question is whether it's not going to be today, of course, but we'll see that. So that's why pay attention to Mr. Rose's number up there, 6892. That's a very, 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 very important number. He does some great stuff on these support and resistance that he has. So we're going to take a little break here, 877-927-6648.
One of the keys to success in anything is the ability to make new distinctions. So what new distinctions are you making to achieve even more success in your life? When it comes to trading and investing, I wanted to become the best of the best, which is why I went on to make new distinctions. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest have been tracking my newsletter signals, which have earned me the ranking as the #1 market timer in the nation for the S&P 500 in gold. On Wednesday, May 23rd at 5 p.m., I'm going to share with subscribers one of my newest distinctions, which is how to follow the money and do so with multiple currencies. You see, money has to flow somewhere, and with the world getting smaller and smaller each day, you and I can identify exactly where most of the money in the world is flowing. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I've posted the chart of that 30-year Treasury bond making that 61% retracement. Longer term, of course, these look extremely bearish. We've had a little bit of a rally here over the past week or so, which is normal because we were so very, very bearish when the rates of 10-year hit 3%. We backed off, from that level. Someone's asked me if I had to pick one chart of all the things that I look at that was the most important. And folks, I would have to say it would be this one right here. That is the one on the NASDAQ, because it has been the leader on the way up along with the banking index. And we have a head and shoulders pattern. We have an ABCD structure right at the exact 78% level to the tick at 70.10. And then we backed off quite a bit. But, whether it's going to mean much or not, we'll have to wait and see. But this is the first day down in the market, so let's sort of pay close attention to that. And always use stops when we're in here. Remember, we're going to have Norm on tomorrow for a cameo appearance. And the reason I'm saying that, and he's given us these times during the day, that have been absolutely spot on. I think he's given us 2 of them now, and this will be the 3rd one, and we'll see if we're going to have him on again, because all he has to do is be wrong one time, and Mark Atwinski is going into the record books as been there, done that. No, we'll have him on. He says great stuff, but we do have this full moon coming up here over the holiday, and remember, the probability of the market being up the day before our holiday is better than 70% of the times, and Friday being that day means that we could have an up day. That doesn't mean, you know, it's going to be up today and tomorrow. It just means that Friday before the holiday, or the day before the holiday, this Friday, has a 7 out of 10 chances of closing higher for that day. It doesn't say how much, just that it does close higher, so pay attention to that. Regarding the cattle, they've had a nice run this morning, and they do look a little bit higher for that double bottom. So live every day in an attitude of gratitude, and may God bless. Thank you.
The TFNN Memorial Day Tiger Dollar Special has just been announced. For 1 week only, we're doubling the bonuses that we normally give out with any Tiger Dollar purchase. Normally, when you purchase Tiger Dollars, you can receive a 10, 15, or 20% bonus with your purchase, but through Memorial Day only, we've doubled the bonuses to 20, 30, and even 40%. This is one of the best Tiger Dollar sales that we offer, and they only come around a couple times a year, so don't let it pass you by. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So whether you're already a subscriber and want to add savings to your monthly or yearly subscription, or you're thinking about signing up for anything in the future, now is a great time to get your Tiger Dollars. For all the details on the Memorial Day Tiger Dollar Special, visit the front page of TFNN.com before this deal ends May 28th.